TSMC is going to open a nuclear plant. Who knows? It's me just making things up. I'm joking.
Hello, everyone. Welcome to another episode of The Circuit. I am Ben Bajarin.
Greetings, programs. I'm Jay Goldberg. So, Ben, you got something new, I hear.
Yes, we launched a Substack, as I guess everybody does these days, but ours is targeting a very particular type of audience. As will probably be obvious when you read it. But it's called the Diligent Stack at the just you can do the diligentstack.com. My approach to this is sort of twofold, right? Everybody who reads my stuff knows we like to be a little bit more technical versus financial. But I did, hope to tie technical realities, moats to market opportunity. I don't make stock calls or have to do EPS and whatnot like you do. But I do think there's a business implication, right, to technology that says, is there upside? Is there a market opportunity? And that's really what we're focusing on. I encourage everybody to subscribe, even though there's a paid version. I'm trying to make it still valuable in the free version. That's maybe 600 to 800 words. Hopefully there'll still be some insight. But we're obviously, putting out more institutional grade analysis for that market. And that's kind of the direction we're taking, because I've been asked to do that by a lot of people. So it's Ben's return to writing a note since 2010, when I wrote about Qualcomm and Apple and Mobo and Telco. So there you go. That is it.
Everybody should sign up. Everybody subscribe. Go get the paid version.
Yeah, and give me feedback too and questions. There's the chat. There's a way to interact with me. Also, we're still kind of using that for like a Discord push to, which Jay's in and Austin's in. That's kind of associated with just to build some community and conversation. Maybe share some charts that we don't normally share publicly as is happening. So there's that. But yes, please sign up and like I said, let me know what you think, and I hope everybody finds value, whether you pay or you don't pay for it. But Substack's the thing, man. Everybody's writing some Substacks. So, all right, let's jump. TSMC. I think we should position TSMC like what are we saying for TSMC? Like, we used to say they were the bellwether. Then it was like, well, Nvidia is the bellwether. Like, what? Let's start with, what does TSMC tell us? Like, how much of a leading indicator should we use for them versus other things before we talk about their earnings? So let's put TSMC in context.
So yeah, TSMC reported this week or last week, and I think I've made this statement many times. I know that many people look look to TSMC as some kind of leading indicator of what's coming next. And TSMC is a fantastic company, but I think it's dangerous when we look to them for end market signal. That's my take, right?
I think so too, but I'm curious as to like two things. So one, in fact, at the beginning of this podcast, because Twitter is the worst at helping you find tweets, but like you and I talked about this right when we were starting off the circuit, and I tweeted this and I tried to figure it out because TSMC was at $90 a share. I remember this distinctly because you and I were having this conversation, and I was like, why are they at 90? Like, you feel like they should be higher when we know that they're going to make money, they're going to become, foundational, they're going to grow with this cycle. But it was, at the time it was 90. But what I think is interesting is we know that they're constrained, and to some degree, in the same way, when you think about the supply chain, there's just sort of an upper limit that we understand. So it's like, value them as they will, but their revenue is capped. Now everybody's revenue is capped, right? I'm not saying that there's just an endless stream of revenue. Like, Nvidia can't make enough GPUs, right? Their revenue is capped, right? Same with Apple. If Apple can't sell enough iPhones, their revenue is capped. But like them, like ASML, it's like you're like, well, look, there's just limits. They can't all of a sudden ship 100 more ASML machines a year. So it's sort of the nitty gritty, right, of just their constraints and understanding their constraints, which is sometimes might be a little bit more financially restrictive than some other companies. And I just wonder how much that even flows into right people's valuations or thinking about the stock when they're in the weeds of a high fixed cost business, right?
So I'm. Let me preface this by saying I don't know what the value of TSMC is or should be. I don't even know the stock price right now. Um, but I do. So I'm not going to talk about the valuation of TSMC. I will say though that when one of the big challenges I think we in the semiconductor analysis business have had for 15 years is looking at all the software stuff going on. And people got very, for a long time, nobody cared about semiconductors. Everybody just wanted to invest in SaaS and CRM and consumer, social, whatever. And there is excitement on that side because your marginal cost of revenue is zero, right? You just add one more customer, you're essentially zero. Um, and that's not true in, real tangible things and hardware. And so there are limits here, and I know it's frustrating for people who are coming to this from that software background, who have been hearing all about this unending internet world for the last 20 years, to sit there and say, oh, wait, there's like weird constraints on that. Like I saw somebody, a very well-known, in some circles, highly regarded sort of pundit thinker, um, saying, why doesn't TSMC just build its own fabs? If they're constrained by TSMC, why let that get in the way? Let's go build your own fabs. And um, so Elon said the same thing, but Elon is talking about it in a very different context, and he actually, I think, knows what he's talking about. But this person is more of a on the political side of things, doesn't quite get that like building a new fab is not just $30 billion a building. There's like hundreds of billions of R&D that have to go into it too. So long way of saying, I think there are real constraints here, and TS this is always the challenge with TSMC is we out here, people out in the world say, "Oh, we need more chips. We need more chips. AI is taking off. It's to the moon." And the team at TSMC has to sit there and say, "Well, how much of that is real?" This is a big focus of their prepared remarks, and especially of the questions. Like they got a ton of questions. About half the questions were touching on their thoughts about AI, right? How real is AI? And they seem pretty bullish about it. But they admit that CC admits, he said, how do I feel about AI? I'm nervous about it, right? I spent the last 3 months talking to all my customers and then all my customers' about this. And then he went on to say that he's, after having all those conversations, he's now confident that AI demand is real. They say that AI accelerators, which I think includes GPUs, is going to their business doing AI accelerators is going to grow 50% this year. Yeah, I think it's 50%. Um, which is, it's a big number. TSMC also, but he also said, like, if this doesn't pan out, this is really bad for TSMC.
Yep.
They're going to
Yep.
spend $54 billion in CapEx this year.
Yep.
They're going to they spent over the last 3 years, they spent 100 billion in CapEx. Over the next 3 years, they're going to say it's going to be much higher than that. So we're already on a trend for 150. That's a huge amount of money, right? And if it doesn't pan out, if demand goes away, then I mean, they have losses. They have massive losses. So
Massive losses.
that's why they've historically been risk averse. That's why
Yep.
everyone is like egging them on to build more, but more and more. And
Yep.
it's dangerous. And this is the point I always make is that they're at the tail end of the bullwhip, right? And if semiconductors are ever going to be cyclical again, and the demand for AI goes away, um, they are not going to be the first ones to know that, right?
Right.
So
Yep. Yes. I'm completely in tune with all of those things because inside baseball, for context for everybody who's listening, Jay and I trade a lot of charts, and there are some charts that we've been trading that show drastic cyclicality in this industry, and it's like everybody who's covered this industry for what, Jay, more than 10 years. I mean, we've done this for much longer. Like, you just know the peaks and valleys, and you're just freaking out. You're like, this is big. It feels big. Yes, it's all up to the right, but we know it doesn't stay there, nor does it flatline and normalize. It drops, right? And that's just the angst. That's the PTSD that we all have who's covered this industry, and that's what I think CC Wei was really like emphasizing. He's like, I know the cyclicality of this business. We know what happens when we overbuild, and we do not want fabs sitting at something less than 75 to 80% capacity, which is usually the number you use to make sure that a foundry, makes money on itself. And so that's the concern. And so we move forward knowing that this is good, right? You're right in their commentary. Their margins were at an all-time high by like 0.2-ish%. I think they've hit 60 a couple times. This was a little over 60. Yes, they're increasing CapEx. Yes, they're on pace to, grow revenue, and she'll probably be in, a sizable increase this year, as they were over, 100 billion for the first time in 2025. So it's the slow march, but everybody knows, right, the underlying supply chain dynamics here, and that's the angst. Like everybody, like I said, everybody who's been in this industry for a long time, they just know, they're like, we can't get too optimistic because when we do, we get burned, and it's so that's the
Right.
financial angst, I think, across that we're seeing. So why so many debates center around this angst? How much bigger can it get? When will the downfall come? Because it's really a win, not necessarily an if, in a lot of people's minds.
Yeah, certainly in my mind, it's a win. Um, but I think we're in fairly uncharted territory. It can go on a lot longer. Um, the very, very deep bear inside of me is whispering, they're the last to know. They're always going to be raising CapEx at the very peak of it all. Um, but that's, I could be wrong. I hope I'm wrong. I hope it runs longer. But they're very bullish, bordering on aggressive, I would say. Like, just their overall tone was beyond sort of the raw numbers. Like, they talked about, they're pulling forward their second fab in Arizona, right? The building's done now. They're installing all the tools. They're pulling that forward to get it up and running by the end of next year, I think. Um, they're expanding in Japan. They're expanding in Germany. They bought another parcel of land in TSM in Arizona, which if you go see that, like, they already have a lot of land and now they're buying more. That's like the ultimate bullish signal to me. I mean, of course, land in the middle of that part of the desert is probably not that expensive, but still. But they were sending all kinds of very, very bullish signals beyond just the big CapEx number.
Yeah, I mean, so look, I want to preface this with saying I understand how difficult of an exercise it is that I attempted, but like we firmly believe that the total foundry. Oh, let me back up. What I attempted to do was say, what do I, Ben, think is the absolute total wafer demand, barring no constraints, right? I get the constraints, we know the constraints, but like what could it be like, just to meet some of the demand that we're seeing in the market? And we think it's around 20 to 25% of a deficit, meaning that you could use that many more wafers, right? Now, the challenge here, and I think everybody needs to like really understand the fundamental element of this, is that the chips that everybody's making for AI and HPC was, I'm going to blank on this, what it was, 60 something percent of revenue now. So the shift has fully moved to HPC, right? To high HPC as a mix. That's been growing up. We've talked about that every earnings call. We've done this. These are gigantic chips. They take a ton of wafers. So if you just say you're at a 20 to 25%, and that could be conservative, right? Wafer deficit, they probably need like 5 more foundries. Like that was sort of like what I concluded, was like, you probably could use 5 more foundries. And right now, you'd keep them full. But I can't guarantee you're going to keep them full in 4 years. And that's right. That's that angst of just there's complexity in the challenges to manufacture. And CoWoS is such a bottleneck. Like every time we have this conversation, we're like, people don't realize how challenging the packaging is to scale. And I think I talked about this early on in the circuit, but a lot of people are new listeners. So I toured Intel's advanced packaging foundry in Arizona, and like and they're walking me through all these steps to package one, all the tiles together into one right sort of package, and I was like, this is not scale. This is very like this is not printing one chip. This is a very difficult thing to scale. And so you have giant chips recording a ton of wafers, normal wafers. You've got advanced packaging. You got CoWoS wafers, and Intel will face this too. Like this is such an interesting bottleneck. And again, like you need more hands, you need more automation. Like you need far more things that go into an advanced packaging facility than you do just printing wafers. Um, but my point is that you could argue that they do need, like I said, a whole lot more capacity. But what they have to balance, which again is the sensitivity we're talking about, is how much of that can I guarantee will stay full? And so because of that, it might be two foundries, right, instead of five or more, which I think they need to again meet this demand when these chips are so big, and you only get a handful per wafer. I'm overemphasizing or being dramatic for the point, but it's far less than 500 per wafer that you get right for a mobile SoC. Um, these are fascinating manufacturing and scale challenges that they're up against, and that does not change anytime soon. Um, but I'm just intrigued by the capacity demand is so much higher than than they can really meet, right? And again, I don't know if that means sure Intel and Samsung and others really are sitting on more of an opportunity, but the bottom line is, TSMC is going to remain severely constrained for at least this year, if not the next two at a minimum.
Oh yeah, I mean they talked about sort of their planning, and what they're really saying is um uh, uh, I don't know, I forget the exact term. It wasn't a majority, but a lot of the spend this year and next of CapEx is actually going towards automation rather than capacity, right? Because they have the Arizona fab coming up next year, so that's some of it, but then there a lot of it is just doing the things that you're talking about, is automating as much as they can, automating more, right? As much as they can. And they talked about that a lot, their manufacturing capabilities. And then they talked about 28 and 29 as being even higher CapEx because that's when A16 ramps, right? And so the next 2 years aren't even about capacity. They're just about, capacity is part of it, but it's also about automation. Like now's not the time to worry about CapEx. That comes later. Like the numbers get bigger. Um, so I mean, and look, I'm being a little bit like cautious on all this and talking about the big numbers. I want to just want to emphasize that like TSMC is awesome. Like they're executing incredibly well.
They are.
It's really it's great to watch. They're a really solid company.
I mean, and it's just wild too, because like when I was doing sort of the margins exercise, like we were talking about, like just to see crazy spikes like in their margins, knowing what happened at that time, right, in 2012, 2013, where it just bottomed, like etc. But if you just look at their operating margin now, like it is up and to the right, and it is almost the same line as Nvidia's, which I think is fascinating, which just shows you how much dollar value they're capturing. Now I know they're raising prices and yada yada yada, but all of that speaks to their execution, the amount of money that they're making, right, at an operating profit level. And I mean, really, like you track a bunch of companies in the space, and I had done this where I just said like, show me operating margin for all the companies we're talking about, but I added Apple, and Apple, Nvidia, and TSMC are standouts from everyone else I put in that list. Who you would be the most, you can guess all the other names in that list, and it's just showing you again the dollar value capture that they're getting because of the execution, like you said, because they're largely a monopoly for now in all of this. But it wasn't just wafers. Like I said, like CoWoS adds so much demand to that. The services supply chain of that. Like there's just so much additional value capture that TSMC is getting, which is just not the kind of thing you're used to seeing in foundries. It's just, it
So
blows my mind.
so I mean, there's a couple things I think are important for the context here. One is they when they talk about their gross margins, they say there's six things that play into it, and price is only one of them. And what their CFO said was price increases last year only covered inflation, right? Because the tools, the inputs are getting more expensive, they pass those costs on to their customers. Um, and it's interesting to me because every few weeks there is some report out of Taiwan or somewhere in the supply chain saying TSMC is about to raise prices really strongly. And I think they frame it very differently. Now, maybe they're spinning it a little bit, but I think there's room for them to increase prices further. Like this is something I watched a lot about, but it was interesting to me that they said price increases only covered inflation, and that the rest of their improvement in gross margins come from other factors like improving process and mix shift. The other thing is I did an analysis some point last year where I looked at revenue contribution or profit contribution to TSMC from by each node, and I had to make some guesses in it, but whenever I did it was about a year ago. It was clear that like the advanced nodes, so called 3 nanometer, was just at break even. And so now we're at a point several quarters later where that process is yielding fully and is contributing heavily to margins, right? Because you think that's like, oh, the newest wafers are going to be the most expensive and have the best margins. They actually have, in the first couple of years, they actually have
Right.
much lower margins
Bad.
because the yields are so
That's right.
poor. And
That's right.
so like 70%, I think it was almost 70% of profits were coming from trailing edge nodes, 16 and higher. And now we're at the point that where 3 nanometer is contributing fully, and that's got to be a big factor driving profitability,
Huge.
right? Huge, and right, and that will go down in 27 when N2 starts to ramp more. But you know that's the
I
simple
mean,
nature of it.
yeah. I mean, the thing
I,
the thing that speaks back to exactly what you said though is that 3 nanometer remains still in high demand. Like I agree with you, the shift will happen, and there's some points I want to make in that. But like that demand still remains high when you're at this capacity challenge that they're at. And again, right, you still might need base tiles, 3 nanometer base tiles in some capacity for advanced chiplets at some point in time. Like that may not totally go away. But it is interesting. Like I don't know how much you had. Go ahead. Go ahead.
I think they're still really heavily utilized in trailing edge,
I think
28
so. Yes.
nanometer, 50.
Agreed.
Like they said, they reduced capacity a little bit for 8 and 10 inch wafers, which is like
Yeah.
30-year-old stuff, right?
Yeah. Yeah.
Which, but like nothing about anything older than that. So they're still running those lines close
Right.
to full, high utilization levels.
Yeah. Yeah. Agreed. And I remember this debate going back to pre this gigacycle of semiconductors where every sort of analysis kind of centered on like could 7 nanometer be bigger than 10. Like that was the debate. Like here's all the things that we're thinking about. Like 10 was a great node, and can the next one be bigger? And then it was okay, 7 was amazing, can 5 be better? Like here's the structural dynamics where like, and the answer is yes. Each node
Yeah.
is doing far better, bigger than the last one. Like they were always like, could 5 be
Yeah.
bigger than 7? Yes. Could 3 be bigger than 5? Yes. Will 2 be bigger than 3? Yes. Like this trend just keeps continuing. And this again, I think I it's at least what's insightful to me to think about this is in a disaggregated design era, you use all those processes. You don't like this monolithic was just one thing. So when they said you go from 7 to 10 to 5, that was being driven by Apple making monolithic SoCs. That's just one chip per wafer. You know, the advanced packaging side for these chiplets is 4, sometimes 5 different tiles per wafer on different processes. So I actually think that's my point in that the longevity of these, n minus 2, 3, maybe even 4 nodes actually has a lot of life in a disaggregated design era. And but you will continue to see uh, high demand for each new node, and each new node will be revenue wise larger than the next one. That's the trend for ever since 10, and I don't think that goes away.
True. But even here, there's a little bit of a worry, which is they also talked a lot about how CapEx intensity cost essentially goes up with each node. Like they kind of like scared me a little bit. It was in their opening remarks. They talked pretty seriously about CapEx intensity goes up largely around tooling costs, right? And I think what they're really trying to signal there is with starting with 8 A16, so not the next node, but the one after 2 nanometer. That's when they transition to high NA EUV systems, and those are really expensive. Like those, it's a whole new tool from ESML. It's closer to 400 than 300, like the current systems, and I think they're trying to signal that. Um, but yeah,
Well,
it's
yes,
expensive.
agreed. But I think again, if this trend continues, right? If you just look at their chart of capex to even gross margin and revenue, like it's growing. Like there's a lot of structural things where that's contributing to each other. Again, gross margins. I mean, I'm not going to say they can't keep going up. It's just to see a foundry in the 60s still blows my mind. Um, but there's a degree of it's all interrelated that I think that they're playing off of to keep, again, that investment leads to dollars. Um, drastically is impacting their operating profit because of the value of older nodes, depreciated foundries, like you're saying. Um, but again, you all of that to say you still have to keep that they are a foundry in your analysis. They are not Nvidia or Apple. Um, but it's like I said, I just keep coming back to it's wild to see these kind of numbers from a foundry. Like we're just not used to that historically.
Yeah. Yep. Um, a couple other things I noticed that were interesting is they said that they were talking about like what is AI doing for customers, right? And they said, oh, they talked to the hyperscalers. I think they talked to Meta in particular. I think gave them very strong signals that Meta, AI was really helping Meta's business. AI was generating a real return there. And so they pointed out, TSMC pointed out on the call that AI boosted their gross margins by almost 2%, right? So
Yep.
right, you're using I wonder if they're using like cuLitho from Nvidia or things like that, AI tools inside their process. Um, a two point increase in gross margins here is small, and 2% is not a big number, but in terms of like gross margin dollars, it's
Yep.
$2 billion last year in
Yep.
savings just from using coding assistance.
Yep. Yeah, and
So
it may not necessarily be totally cuLitho, although they have talked about
I'm sure it's more. Yeah.
well, I know, but also like Synopsys and Cadence have right design
Right.
agents right that help you. So I don't know. It's a good example. I thought that there was so just going back to CC Way's comments that like they checked with their customers and they checked with their customers' customers. He made it sound like they were having conversation with software companies as well, and that software companies are seeing the value of agentic drive value to their software to their enterprise businesses, to which we all right acknowledge that is underpenetrated, right? Less than 20% of enterprises are deploying at scale. So I think maybe that was part of it too. He was like, there's still a lot of adoption. There's positives that this is something going to keep being adopted, and that's going to infect the software industry. Is going to grow drastically, right? You've seen some numbers where it's like another $1 trillion of software dollars above sauce coming for agentic or more. But I think that's my read on that was really what he was getting at, was that he thinks it's a build out and that AI software's early, and so there's enough demand, right, to really justify this increase
Yeah.
in forward
Right.
capex. So
Right. How much revenue do you think packaging contributes?
okay, hold on. Uh, a year or a quarter?
Percent for the
10,
year. Yeah,
15%
10. It's
ish.
a little bit less than
Yeah,
10. A little bit less than 10%.
yeah, yeah. I
A
know
little
it's
bit less
not
than
a
10%.
lot. Those wafers are cheaper. I get that. I just the complexity of it is the part. So okay. So let me speak to the automation point on this. When I was at Intel's foundry doing this, there were a lot of bodies moving wafers around for advanced packaging. There's a lot of humans in this loop. To be honest with you, I don't know how a machine does that until it's a humanoid robotic. But yes, there might be some. I was stunned at the bodies required to do advanced packaging, of moving wafers from one stitching machine to another one, to the substrate one, to the hybrid bond. Like, anyway, it feels very expensive. Despite the money they're making, I get. CoWoS wafers are not the same, but I guess it'll be interesting to see if that changes. Like, does that number go up a little bit each year, from 10
Probably,
to 15,
probably because
maybe
you
20?
think about it, like 5 years ago, packaging was essentially zero for them,
Yeah,
right?
nothing. Right.
Right. But
Plus
to your point, it's a really good time to be a company that does process automation and
process automation.
semiconductor robots,
Yep. Testing,
robotic.
validation.
Oh, yeah.
Five names I can think about that are interesting there. So, here's the other thing too. Like, right now, this is CoWoS S, maybe some L. I think is trying to. Then you got CoWoS P. Then you've got wafers. Much deeper into the substrate. Like, maybe there's again a price curve that comes up with that. Like maybe CoWoS P or etc. is more expensive, right, than CoWoS S, right? And so there's a little that's super supply chain. Like, that's not public information. That's supply chain noodling, trying to figure out. But I am intrigued by that part, right? That this very complex process, how they might start to raise prices there. That's a good one. I like this. Let's keep tracking
Okay.
CoWoS's
I got another,
contribution to revenue.
so I got another one for you. So if packaging is a little bit less than 10%, what percentage of revenue are masks
Oof. I mean, sub five.
is bigger than packaging? It's
Oh, it
10%.
is. It is 10,
Yep.
or a little
Yep.
more than 10%.
Yeah, they didn't give an exact number, but they said the two of them together were about 20%, and they said that packaging is a little bit less than 10. So, and I say this in part, not so much to talk about their financials, but I know that there are a fair number of listeners who work for semiconductor companies and have to pay for masks um, at TSMC, and just know that that's 10% of revenue. That's like a serious amount of revenue for for the company, right? Um, it's very expensive to purchase and pay for masks at TSMC.
Yeah.
It's a lot of money.
Fascinating statistic.
Yeah.
All right. Any
They got asked about, yeah,
yes.
I had two things to close with. One is they got asked about Intel. Are you concerned about
Oh,
Intel as
that's
a
right.
customer?
Yeah. Yeah, right.
SEC said he was trying to be polite, and then he just said, "But no, no, I'm not concerned about them." He was very
Nor
polite
should they
about it,
be.
but he was not concerned.
Nor
Yeah,
should they
there's
be, honestly.
plenty to go around. And then my favorite thing was when he said, one of the things I learned talking to all the hyperscalers was that they're really good at manage long-term planning around electricity. They all
Yeah.
have 5 and 6 year plans for electricity, and he's like, "Yeah, we should do that too." So I thought it was interesting that even I mean, electricity is a big hassle in Taiwan, has been for a long time, but it's clear that they're going to, TSMC's going to open a nuclear plant. Who knows? That's me just
Yes.
making things up. I'm joking.
Yes. 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 No, but you're right. Right. Power. I mean, that
No
sounds like they're
nuclear power
securing.
in Taiwan.
Right. It sounds like they're securing even more land, and then obviously the power to that land.
Yeah.
Yes. Okay. All right. Yeah. All right. So that was a good nut on TSMC. Um, let's switch to OpenAI. Had a deal with Cerebras, and so there's a couple things that are interesting to me about this. Obviously, OpenAI is admitting that they'll take every bit of compute wherever they can get it. So make their own ASIC, buy Nvidia, buy AMD, partner with Cerebras, who interestingly, like, other than Grok, right, that kind of made an inference system. Cerebras is interesting because they've been building data centers, infrastructure, running Cerebras gear, right? To just say, hey, bring your workloads here, right? So building manufacturing, securing power, etc. And so OpenAI, of course, is like, yeah, we need it. We need faster inference. We need to run because we can't get enough compute. It's not immediate, right? This is out there. I will say, Cerebras is not going to solve this problem, but I will say the average reasoning time for me in agentic tasks I throw to GPT is like an hour and a half. And I mean, I get like if I task a human, I'm okay with them taking a couple of hours, but like I'm used to this being like software being faster, and I'm not used to having to wait an hour and a half. So I think everybody could agree we want faster inference, and that was one of the telling points in Cerebras's value is lightning fast inference. Um, but anyway, my base read on that was, hey, we'll take compute wherever we can get it. Here's another company that's got some infrastructure, so let's work together on some infrastructure.
Thank you for reminding me. I've been running a Claude task agent in the background, and I needed to give it permissions. Um,
Keep
it's
going.
been going for days. Um, so yeah, OpenAI announced that they're going to partner with Cerebras on something. I I will say that I'm at the point now where everybody is. OpenAI now has announced one of these announcements with every major chip vendor, and now they're going into some of the smaller ones. Like the only one missing at this point is Qualcomm, and why wouldn't we see that soon? Have they made an announcement with Qualcomm? Did I miss that?
No,
No,
no, no,
not
no,
yet.
no, no. I was just
But
racking my brain on is there names that they're missing?
right, AMD, Broadcom, Nvidia,
Yeah.
Cerebras, like it's just everybody. Let me just say this. I was at a social function last weekend with a bunch of AI people who work at some of the big AI companies, and um, it was almost a running joke. Uh, like OpenAI is announcing with everybody, and I think it's important to remember that n- most of these deals are not finalized. Like the deal with Nvidia, as far as I know, hasn't been finalized. Nobody signed anything. So these are press releases. I don't know what we call vaporware in the age of AI, but like we're bordering on that. And so I think we have to take it all with a big dose of salt.
Yes. All right. So let's go into that because then the question, which I'm sure is what the angst you hear with this, is with what money OpenAI. And so today, we're recording this on Friday, January 16th. You will all listen to this Sunday or Monday of the following week. But so this Friday, January 16th, OpenAI has announced ads are coming, and kind of what was sort of hoping for, because they have this in other countries like India, and a few others where there's like an $8 a month kind of entry level fee. So they're bringing that everywhere. And I say that point because um, there are, by different accounts and standards, 100-ish or maybe more, 200 ish million people who pay for iPhone storage. And I'm not going to say that that's not valuable, but I just wonder, if AI has some value, is it worth $5 a month? Is it worth $8 a month? Like, is there an interesting subscription model there? Again, not the $20 a month, but something lower. Um, so it's not all ad driven, even though the ads they are showing are not bad. They're very similar to, if you see them, how Facebook does this in a post. There's like a little ad. It happens to be something you've been searching for because they know this. Um, it's not bad. It's relevant. It's contextual. This is them starting to say, let's start making some more money because we need money to afford compute. So positive step. Depending, we'll see how it goes, but they clearly are trying to change their revenue trajectory, and both ads and kind of the $8 now entry level globally is the start in that direction.
Yeah, we'll see. I mean, I
Do
say
you
this in the
think
context of
do you think ads hurt this drastically? Like, this is what I've been debating. Like, does it really hurt your experience that much where you're just like, this is stupid, I'm gonna try something else?
it depends very much on what the ads look like and how they implement ads. And if anybody is curious about this, go back a couple weeks ago. Ben Thompson on his Trajectory podcast interviewed Eric Sweifert, who's a mobile ad, or not a mobile, he's a digital advertising expert, really good insight on his own. And where they came down was if OpenAI has ads. They're going to look more like Facebook's ads than they are Google ads. So you're not going to like type in a search. You're not going to type in a search into ChatGPT and say, "Hey, what's the best whatever?" And it's going to give you sponsored results for the best, restaurant to eat at. Instead, they're going to be like Facebook, where it's like they just know a lot about you. They have all your context. Um, they can figure out what's an ad for something you might be interested in that's not necessarily related to the thing in front of you. So I don't know what their ads are going to look like. If they look, I think if they do sponsored results, I think that's a disaster, and I think people will move away from that because you won't be able to trust the results. But there's another model that they can adopt, which is these personalized ads. They know kind of what you're interested in, and that won't infringe on the quality of your
Right.
actual task in front of the agent.
Right. I completely agree. And there's elements of this like, okay, Ben's going to complain for a minute, but like I still am shocked that when Ben does product research on Gemini or GPT or whatnot, like I can't meaningfully get links to go and buy that stuff, right? Like it's still a
Well,
gigantic pain. They're like, go search Google, like Gemini will tell you, go search this term if you want to buy these things. And I'm like, dude,
right.
just put it in freaking Gemini. Like, I'm here, you're Google. Why is this so difficult, right? So there's a lot of that underlying stuff that I think they can definitely monetize on. But I think that, like, exactly your point, that element of it knows something about you, it knows kind of what you've been searching lately, where you're trying to get to based on the conversation with something. But it is, to be honest with you, it's such a natural fit for a conversational. Like I do this all the time. Like I'm constantly like trying to upgrade my bee situation and like honeybees, guys. This is Ben's talking about honeybees, and I'm like, do I need to get them, a feeder? Do I need to be feeding them with things? Do I need? It's winter. Do I need to put a wrapper around them, right? And then you got to go search all this stuff. Like it's just, it would be nice if it's like, yes, you do, and here are the three best products in your price range that can get that you should go, look at or buy for this need that you have. Like it's going to know that through my conversation better than my sentence search. So I think there's a lot here, but you're absolutely right. Like it's got to feel natural. And again, if everybody takes a look, you can see the demonstration that they showed. It is exactly like Eric said on Ben's podcast. It feels very much like Facebook, um, which though Facebook can also be completely out of control and unrelated. So their recommender engine needs to get better, but it's improved some. So anyway,
Because of AI.
because well, yes, and it's gotten worse because of AI at the same time. Um, but yeah, this is them trying to monetize. So I'm not going to fault them for this, man. They need to make money. They are not Google, right? Google has a huge advantage here in monetization.
Yeah.
Yeah, I'm not going to fault this for it, but we'll see. I'm glad. I mean, honestly, like I'm glad they're making a go at this because they do obviously need money to afford all this compute. And that's not just going to come from an IPO or debt raising. They should start driving revenue, real revenue from the whatever it is, almost billion people that they think they've got, using the service.
Yeah. So I signed up this week for the pro plan on Claude on Anthropic because that's the apparently everybody's using that. I'm still figuring it out. But I know a lot of people are starting to use it pretty intensively. I just don't see it. I guess where I'm coming to is like it's useful. I can see how it could be incredibly useful. I don't think we're there yet. I think there's a lot of variability still here in what the ultimate business model is. I'm not convinced the way we use AI in the future is what we think it is going to be. Um, so yeah, they need. I guess they need revenue. I'm not sure they. I don't know how much they do. I'm still in the camp of business models for AI are still to be determined.
Yes, I agree. I think the monetization point we're they're talking about here is for consumers. The
Yeah,
enterprise side, I think there will be increasing value that makes a higher price point justified. I don't expect a consumer to pay $20 a month for any of this stuff, to be honest with you.
yeah,
So it's really what can they get? Because they have a ton of people like using this now, trying it, like using it to replace search. Like my father-in-law, who's one of the slowest adopters of technology I've ever seen, but was a high user of Google, like loves ChatGPT, loves the free version. He searches he's just curious. He's a curious dude. And so he loves GPT, but he's not going to pay. He will never pay for that service. You got to monetize those people, right? So we'll see. It's like I said, it's a good start. This will be interesting. But as we've said, they need to start making money. So we'll see how this goes. And you're right. The business model may not be settled, but at least we're trying to refine what it is. And this is a start. All right. Last on our agenda was we've been tracking GPU pricing for a while, which everybody loves to have this conversation. And I need to caveat this entire conversation with not all GPU instances are created equal. I think this gets vastly underappreciated when somebody shows you a Bloomberg terminal chart for H100. You're like, well, which H100? Is this 8 GPUs? Is this 2 GPUs? How much RAM? They don't tell you that. They just look at like some normalized. So not all instances are created equal, right? You can charge more for a partition that is higher GPUs and higher memory. You can charge less if it's less memory and only a couple GPUs, which is where you see $1 to $2 spot and on-demand pricing. But we track this. We have a tracker, Jay and I, and we look at these trends. And there's a couple interesting things. Yes, as I just said, people are charging $1. Similarly, are the hyperscalers charging significant premiums over everyone else? And I thought that was interesting. The pricing power of the hyperscalers. So that was my top line point. I'll let you make your top line points, and then we can dig into a couple others.
Yeah, a couple things have stood out for me in the data. One is just how little actually stood out. Um, Pricing is kind of where you think it would be. There is clearly, Blackwells are more expensive than Hoppers than Amperes in a pretty predictable fashion. But prices are pretty stable, right? We haven't seen any big declines or any big swings. A couple categories have gone up. Pricing at the NeoClouds or just across the board, is pretty stable for now. I mean, we don't have a ton of history here, but so far so good. I think the premium. This is very much a glass half full, glass half empty kind of thing. Because you look at the hyperscalers, AWS, GCP, and Azure, their pricing for GPUs is sometimes double what the NeoClouds are charging. And yeah, like, okay, I understand they have a premium, they have the best customers, they have teams that can support those customers. There's lots of reasons why if you're a big company, you're going to go with AWS rather than some NeoCloud you've never heard of that was Bitcoin mining 6 weeks ago. The flip side though is I look at I mean it's a pretty stark gap in the pricing. It makes me a little bit nervous about what the long-term trend is, because over time people will get more comfortable, customers will get more comfortable at branching going further afield when the savings are that big, right? And if the truly sort of common layer here isn't your AWS console, it's your CUDA code that can run perfectly well on other GPUs. um, Maybe you start to consider, right? Both CoreWeave and Nebius have serious efforts to get into the
Yep.
enterprise. CoreWeave
Yep.
just hired a chief revenue officer who came from Amazon. Um, again, I'm not saying you go to some tiny little, you're a Fortune 500 company, you go to some tiny little NeoCloud, but like there are serious alternatives there who are much, much cheaper.
Yep.
Now, in fairness, transitioning is hard. Like GPUs are very, very hard to work with. Nothing's perfectly portable. To your point, like just saying, oh, this is a H100. There are a thousand flavors of H100s, and they all sort of perform differently. You have to be able to manage that. Um, but still, I think, I don't know. It's right now, all the pricing is good. Let's go with the headlines. Go with the good news. Pricing looks
Yeah.
stable.
Yeah, and I think there's another thing too. Like I've had this conversation with some enterprises where like I've said like, hey, there's a couple names and they're on our list that they're charging like $1.65, and and I'd say like how much does pricing like matter to you guys like this and there, and they're like, I wouldn't use those guys. That's like going to a motel. Like I would rather go to the luxury resort for the quality that I know I'm going to get. So again, not everybody's going to be in a position to be picky, right, about their prices, but there is a quality of hotel. Actually, I like this hotel analogy a lot. In the greenfield space of building new hotels in luxury land, uh, you've got cheap ones and you've got luxury ones for your tenants.
Yeah, yeah. And if you're, it's like any company, right? The CEO and the head of sales, they're going to sign a big deal. They fly business class. They stay in the fancy hotel. But by the time
Everybody
it
else,
becomes sort of mundane and,
yeah,
the cost cutters get involved, it's everybody staying at the motel and it's fine. Like, Hampton Inn is perfectly legitimate in a lot of markets. It's clean, it's safe, it's
yep,
close to the freeway, right?
yep, yep,
So,
yep. And the only other thing that stood out to me was like it's very hard because this was one of the reasons I started this exercise was like I want to price Grace Blackwell. Like
yes.
and it's very hard to do this without talking to a salesperson. Basically, you have to be a company willing to sign a long-term contract with the hyperscaler to even start having a conversation about price for Grace Blackwell. And like so to Jay's point, what stood out to me was what's not on the list. And we cannot track Grace Blackwell pricing because it is not available outside of long-term leases for the vast majority of people at these hyperscalers. And I thought that was interesting, right? That this is one of the things where you put new infrastructure in, and you're predominantly going to sell that to big enterprises on long-term contracts. And again, that's great because there is a metric here that I know the hyperscalers know based on their infrastructure costs, so data center costs, which is get enough long-term contracts at a set rate and that infrastructure pays for itself in 3 years or less. And there's a number that they know that if it's above that for that time, they're making money on that infrastructure. And
Mhm.
so that's why I think these long-term deals are super interesting for new infrastructure, because that's driving a lot of profitability on ROI on that CapEx for AI workloads.
Yeah. And this is, I mean, this is a super hot topic right now. Whenever looking at the NeoClouds, there's so much debate. We get into this whole topic of depreciable lives of the servers and what they're worth. Um, the key indicator is going to be pricing, and we don't have great signal on Blackwell, um, but we have some. We have some. It's not zero. Uh, there is a discount for Hopper. The big question I have that I tend to ask NeoClouds every time I talk to them is we know what spot pricing is. That's what we're tracking publicly, spot pricing. And we also know that contracted long-term pricing, we don't know what those are, but it's safe to say that it's lower than spot pricing. Right? You get volume discount if you book long-term. And and so as we see shifts in, eventually copper prices are going to come off more. The question is, to what degree does contracted pricing track spot pricing? And we just don't. No, all of this is so new, we don't really know. But presumably over the long term, it sort of rationalizes. But I think we're a long way from getting clear signal on that.
Yeah. Anyway, we will keep sharing those insights as we track this almost weekly. But I think not a lot changes week to week. But there are little nuggets we're hunting for that we'll share as well because we know this is a economic and market opportunity conversation for GPUs. So anyway, we'll wrap there. Thanks for listening, everybody. We always appreciate your time and your comments. We look forward to a great 2026. We've got lots of interesting stuff lined up for you guys. So take care, and we will talk to you next week.
Thank you, everybody. Click like, leave us a review, tell your friends, and be sure to sign up for Ben's new Substack.
The Diligence Stack. Thanks, everybody.